enough fluffy, squishy, fun. So let's get into some nuts and bolts. Here is a diagram that's important to go through, and since we've been talking about younger children for a moment, let's stick with the right side of the diagram. Now, here's an important point. You never want to pay your children. Okay, so we're talking about paying children under age 18 or dependents under age 18. So I want to answer this question, which will often come up. If you have stepchildren and they're claimed on your tax return, it's the same as if they're your children. So as long as they're a dependent on your tax return and they're under age 18, it qualifies. Also, if you're divorced and your spouse is claiming the children as a dependent, but you're paying your children, and I'm not talking about child support, but you're actually paying your children, the same rules apply if they're your children or they're the dependent on your tax return. So that was a little tricky, but I think that made sense. We're okay? Is that not too hazy? All right. So let's look at our right side of our equation. So you would never want to pay your children directly out of an S corp. So for children under age 18, and we've got our short-term, long-term strategy here, you would never pay your kids out of an S corp. Bad, because you would have to withhold FICA, SUTA, workers' comp. We do not want to do that. But you have two other options. You could pay them out of a sole proprietorship, and you could pay your kids directly out of the sole proprietorship, or you could have an LLC and pay your kids directly out of an LLC that's owned. It has to be owned 100% by mom and or dad. And then the third option is we may even set up a family management company, a sole proprietorship family management company, and hire the kids here. And what we may do is transfer management fees over here to pay the kids. Okay, now I know this looks like a lot of gobbledygook, so let me break it down. First, your children need to have their own bank account. You can't just say you pay the kids, you actually have to pay them. Next, you would never pay the kids out of an S corp. Third, you could pay them out of a sole proprietor, you could pay them out of an LLC, or you could pay them out of a sole proprietorship family management company that kind of serves as a clearinghouse, thank you, for paying the children. So let me give an example here. When my 4 children, I have 4 kids, when they were all under age 18, I paid Dylan the year before he turned 18, I paid him $6,000. I paid Sydney and Allison $4,000 each. I have twin daughters. And then I paid Molly $2,000. So right here, you can see we're at $16,000, right? So this $16,000, I was able to pay to my children and take a tax write-off. So what I would do was transfer a management fee of this $16,000 on the books of my S corp or on the books of my LLC. I would transfer $16,000 to the family management company and then pay my children $16,000. The sole proprietorship is zeroed out. It's a Schedule C, and I pay 0 tax on my sole proprietorship. I get an extra write-off in my S corp, and my kids pay 0 tax on their money. That's the mechanics. Pretty straightforward. Now, do you have to do this every week, every month? Do it all at once? That's up to you. What I would normally do is when my kids need to pay for school lunch, school clothes, soccer lessons, music lessons, whenever they need money for something, I don't pay for it. I let their debit card pay for it. See, this is why this works, is that you don't have to be rich to do this. Please, let me repeat this. All of my Renata students out there, forget all that asset protection, multi-million-dollar crap. If you've got children and you're paying for school lunch, stop. Pay your kids and let your kids pay for their own school lunch. You now got a tax write-off. So you're going to pay the family management company from your S Corp and then pay the kids and let the kids pay for their own expenses. I would do this throughout the year. In fact, just last night, Molly called me. This is Molly. She's now 12 years old. She said, Dad, she came by the office this week. I owed her $45. She said, Dad, can you transfer $45 to my account? I said, sure. So I took $45. I went online to Wells Fargo. I transferred $45 to Kohler Family Management, and then I transferred $45 into her debit card, and then she went down to Lush and bought overpriced soap. Okay. Now, for ladies, you know what Lush is all about. So, you know, $45 got her a piece of soap the size of, about 1 inch in diameter. But anyway, the point is, I got a tax write-off for her little trip down to the mall because I transferred the money here, then to here, and then she paid for her own trip to the mall. Now, at the end of the year, come December, I run a little report. How much money have I transferred into Molly's account throughout the year? And if it's close to these numbers, or I'm a little short, I'll just transfer money over, transfer it into her account, and then turn around and reimburse myself and zero out her debit card. Sometimes my kids will say, hey, I just saw $1,000 show up on my debit card and it disappeared. I go, I know. I just reimbursed myself for all of the crap I paid for you last, whatever. So you can transfer money back to yourself. You just have to launder it. Sorry. You have to clean it by transferring it through your kid's account. So you're going to transfer the money and move it through. I want to just give one more example of this. Many of you have heard me joke about this for years. With my twin daughters, it was graduation a month ago, and they had graduation dance. There was like a big dance at the end of the year. Well, they needed dresses, they needed nails, they needed hair, they needed shoes. I did not pay for it. I did not pay for it out of my S Corp. I transferred the money to the family management company, then paid them, and then they went and paid for their graduation dance. So I got a tax write-off for prom, even though I didn't pay for it. I let them pay for it. So all you're doing here is, let me repeat this, you don't have to be rich to do this. You're just changing the way you pay for your kids' expenses. You're letting them pay for it rather than you pay for it. All right, now before we talk about kids over age 18, let's beat this up, and we're going to talk about grandkids in a minute. We'll come to grandkids. But let's get this concept down for a minute. A couple questions. Michelle first. I answered it? Okay, over here.
Okay, for accounting purposes, how do you take the money from the S Corp and you say you transfer it into your sole proprietor family management? How does that work? I mean,
functionally.
Okay.
How's it work?
Yeah, I mean, how do you put it in your QuickBooks, for example? What accounts or whatever?
I know this might blow your mind. I'm going to do it right now for you. I know this is going to blow your mind, but right now I'm going to go on to wellsfargo.com, and I'm going to log in here. I have my login pre-programmed here, but of course this is the iPhone 6, so you can't get in here without my fingerprint. So don't try to do this. Okay. So now I'm into my Wells Fargo, and I'm going to just basically do a transfer. So right here, I'm in Wells Fargo, and I have, if you can see this, I have about 20 bank accounts. Now these are for different entities and the kids' accounts, my spouse, Jennifer's account, and all this. I'm going to go to transfer, and I'm going to choose transfer now, and I'm going to transfer right now Come on, it just takes 2 seconds here with our internet here in the building. Boom, boom, boom. This is how easy it is. I am excited to show this. There we go. I'm going to transfer from Mark J. Kohler CPA JDPC. So I just chose my S Corp bank account. Boom. And I chose Kohler Family Management, which is a sole proprietorship. Boom. And I'm going to transfer $20. I'll transfer $20. Go and done. There it is.
Okay. Yeah,
I don't
no,
write a check.
Yeah.
I just do an online transfer.
No, I understand that.